Welcome to the deep dive. We take the sources you send our way and give you that essential shortcut. Today, we're really digging into market microstructure, specifically cumulative volume delta, CVD. Our goal here is pretty crucial, trying to understand that, hidden flow of aggressive trades. What does it really tell us about conviction behind price moves?
Right. And the quick definition, it's basically a running total. It shows you if aggressive buyers or sellers are, well, dominating the executed trades over time. Think of it like an aggression meter for the market.
Aggression, that's the key word, isn't it? So how do we even tell an aggressive trade apart from a passive one when we're looking at the tape?
Well, it really boils down to the execution. An aggressive trade has to take liquidity. So an aggressive buy, what people often just call a market buy, it executes right away at the lowest available ask price. And an aggressive sell, that hits the highest bid price available.
Okay.
The delta for that specific trade is just the volume at the ask minus the volume at the bid. Simple as that.
And the cumulative part, the C in CVD, that's just adding all those up, session long.
Exactly. It's the running sum of all those positive deltas from buys and negative deltas from sells. Now, you mentioned volume CVD.
Yeah, I noticed the source materials seem to prefer volume CVD. Why not just count the trades? Tick CVD seems simpler. Was the last trade an uptick or downtick?
Because precision really matters here,
Yeah.
especially if you're trying to gauge conviction. Tick CVD, it just counts trades, or maybe infers based on price ticks. It can get noisy, very noisy sometimes. Volume CVD, though, uses the actual amount of shares or contracts traded aggressively.
Oh, okay.
Think about it, one big aggressive order for, say, 1,000 contracts.
Yeah.
That carries way more weight, more signal than maybe 20 tiny one-contract orders.
Right. Volume CVD actually sees the size of the aggression.
Precisely. It captures that reality.
That makes total sense. You want to follow the actual capital being put to work aggressively. Okay, so let's get into using it. What are the signals? First up is confirmation, right?
Absolutely. That's kind of the baseline use. If the price is moving up and you see the CVD also steadily climbing, that confirms it. It suggests aggressive buying is really supporting that rally. It's not just, drifting up on low volume. Real market orders are behind it.
But the real juice, the sort of aha moment traders look for, that's when it doesn't confirm, when you see divergence.
Exactly.
Yeah.
That's often the most valuable signal.
Can you give us, the classic bearish divergence example?
Sure. So picture this. The price pushes up, makes a brand new high, maybe breaks resistance, looks strong on the chart. But then you glance at the CVD indicator, and it's either flat or maybe even lower than it was the previous price peak.
Ooh.
That's your bearish divergence. It's practically screaming, warning, this rally lacks conviction. The aggressive buyers just aren't showing up in force even though the price looks good.
So it's more than just volume drying up. It's specifically the aggressive buying needed to make that new high.
Yeah.
It just wasn't there.
Yeah.
Suggests a weak top, maybe a reversal coming.
Precisely. High probability of a weak top in that scenario. And that leads us nicely into absorption, which is, well, maybe even more interesting.
Absorption, okay.
What if the price starts moving up, maybe pretty quickly, but the CVD line just goes completely flat, doesn't budge?
Huh. Price up, CVD flat.
Hmm.
Well, that means the aggressive buying volume is being perfectly canceled out by something, right?
Exactly. Perfectly matched. The aggressive market buys are just being soaked up, absorbed by large passive sell orders, usually limit orders, sitting there waiting.
Ah, like a big wall of sellers just absorbing all the incoming buy orders.
Right. And traders often infer this is, smart money or larger players quietly unloading big positions into that aggressive buying. They absorb the liquidity without letting the delta really show that buying pressure.
It's like trying to fill a leaky bucket. Interesting.
Yeah, the water keeps pouring in, but the level doesn't rise.
Okay, that's a powerful concept, but it takes us straight to the big limitation here. If CVD only tracks executed trades, what's the big blind spot?
The biggest one. It can't see the orders that aren't executed yet, especially the hidden ones. Think hidden liquidity, iceberg orders. CVD tells you nothing about those until they actually trade.
Right, the icebergs. For anyone listening, that's a huge order where only a tiny bit is visible on the order book at any one time, right?
Exactly. You might see, say, 100 shares offered, but lurking underneath, unseen, could be 100,000 shares ready to trade at that price.
And CVD only sees the tiny tips that get executed.
Correct. So the true scale, the real intent of some of the biggest players, often totally invisible to CVD, which is why context is just non-negotiable.
You can't use it in a vacuum.
Never. You absolutely have to combine it with looking at the overall market structure, support and resistance, other indicators perhaps, and definitely solid risk management. It's a tool, not a magic wand.
Okay, so wrapping this up, the big takeaway seems to be CVD is fantastic for spotting aggression, for seeing momentum driven by market orders.
But it's not mapping out intent, especially when big players might be deliberately hiding their actions.
Exactly. Aggression, yes. Full picture of intent. Not always.
Which leaves you, the listener, with something maybe a bit provocative to think about. If you're relying heavily on indicators like CVD that only show visible executed flow, what does it mean when potentially the majority of institutional volume, the real market-moving size, is deliberately executed out of sight? In dark pools, through icebergs, what's happening in the dark, and how might that ultimately shape what we eventually see in the light?